Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 big name stocks that are trading at 52-week highs. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Like I said, today we're taking a look at 3 stocks that are trading at their 52-week highs. So of course they've seen some great growth lately, but we want to take a look at what analysts think lies ahead. And today we have quite a mix of buys, holds, and sells. Just before we get into those 3 stocks, this is a heads up that TipRanks is having the biggest sale of the year for Black Friday. You can get 45% off premium and ultimate subscriptions, newsletters, all sorts of tools. So head on over to the TipRanks website right now to take advantage of those great deals. And of course, with Thanksgiving coming up this week, just a reminder that markets are closed on Thursday as well. Now let's get right into our 3 stocks today. First up, we're taking a closer look at Visa. Their stock trades under the ticker V, currently priced at $247 per share. They've recently been hitting their 52-week high of around $250, and that is a price that they did hit here back in 2021. Overall, in the past year, they have seen growth of 20%, including growth of a few percent here in the last 3 months. Now, as the stock has been gaining, we've seen people taking profits as well. This includes hedge funds who have decreased their overall holdings in the stock by over 86 million shares in the past quarter. Also taking some profits are insiders, as corporate insiders have placed informed sells of 9.4 million in the last 3 months. Helping fuel Visa's recent growth has been a string of earnings beats. Revenue has been rising steadily quarter over quarter, and in their last quarter they came out with a solid earnings beat at $2.33, and this is one of many earnings beats that the company has reported. But with all of this recent growth, do analysts think there's more upside ahead? One analyst recently weighed in with a hold rating, though they did increase their price target a few dollars. The Mizuho analyst noted that the company's U.S. volume growth as a percent of incremental personal consumption expenditures declined yet again in Q3 and remains below historical levels. The firm views share of personal consumption expenditures as a key yardstick in Visa's long-term moat in the U.S. Feeling more bullish on the stock is one analyst from Morgan Stanley who recently reiterated their buy. They stated that they were impressed by the company's ability to provide a revenue and earnings per share growth guide that aligns with consensus despite ongoing macro uncertainties, attributing this to healthy spending and travel trends that Visa is currently observing. They said they appreciate Visa's track record of outperforming their initial targets and believes that even with some moderation in spending, the company will strive to manage the business and expense growth to at least meet targets. The Visa stock currently has 23 analyst ratings, and this one leans towards a strong buy, with 20 buy ratings and just 3 holds. That strong buy rating comes with an average price target of $277, which would be an upside of about 11.8%. Down below, you can see those recent ratings, a lot coming in following that last earnings report. On the low end, we do have a hold with a downside of 1.5%. A lot of the other ratings all in the double digits, with a high-end price target with an upside of 18%. Our second company that has been hitting 52-week highs is Micron. Trading under the ticker MU, their stock is currently priced at $78 per share, recently hitting that 52-week high. Now, when we look back a little further, they have surpassed this price previously. Back in 2022 and 2021, they were well above $90 per share at some points. In the last few months, they have seen some growth of 22%. And once again, we have people taking some profits. Hedge funds have decreased their holdings by 59.4 million shares, taking a lot of profits there, as well as insiders, as we've had sales of about 600,000 in the last few months. Now, Micron has been posting a loss per share for the past year, but the last couple of quarters they have at least come in with a narrower loss than expected. You can see that revenue has been coming in quite dramatically lower when we look at a year-over-year basis, and their last loss per share came in at $1.07, but this was 7 cents better than anticipated. This is compared to, however, earnings of about the same in the positive the previous year. We do have a couple of mixed opinions looking forward on the Micron stock. One of those comes from Bank of America, who, although they did raise their price target, they maintained a hold rating. The firm sees a tricky setup for semiconductor stocks heading into Q3 earnings seasons, though they call the compute AI the best neighborhood. The firm does see Micron approaching a cycle trough. We do have one analyst from Citi who's feeling a bit more bullish on the Micron stock with their recently reiterated buy. They believe that positive market dynamics are expected to ultimately benefit Micron, saying that TrendForce predicts an increase of 0 to 5% sequentially in DRAM ASPs for the first quarter in 2024 due to production cuts by memory makers. This reinforces the notion that the DRAM upturn has commenced. The Micron stock does currently have 24 analyst ratings, but comes in as a moderate buy with a few mixed opinions. Plus, you'll see we've surpassed a lot of price targets already with the recent growth. The stock has 18 buys, 5 holds, and 1 sell, with an average price target of $78, which is pretty much where we're sitting right now. And down below, you'll see those recent ratings, the most recent all coming back near the end of September, following that latest quarterly report. Many of them we've gotten close to or surpassed some price targets. Of course, on the low end, we do have a sell with a downside of 25%, and a few more with slight downsides. On the high end, an upside of 15% from Susquehanna. And our third stock today, trading near 52-week highs, is Palantir Technologies. Their stock trades under the ticker PLTR and is currently priced just above $21 per share. Now, looking at the chart, you can see they've had explosive growth this past year, up 193%, as they were trading down below $6 at one point before seeing these recent gains in the last few months. When we zoom out a bit more, though, you can see the stock has actually traded much higher than this. Back in 2020 into 2021, they were up near $40 a share at some point before cooling off majorly here. And once again, we do have some big people taking their profits, with hedge fund activity decreasing by 4 million shares in the last quarter, and corporate insiders selling off over $5 million worth of shares in the last 3 months. Palantir has been seeing an upwards trend in both earnings and revenue, and at the start of November did come out with an earnings beat. For their Q3, the company reported revenue of $558 million and earnings per share of 7 cents, coming in 1 cent ahead of analysts' expectations. But the Palantir stock does have a lot more conflicting analyst outlooks. One of those is a hold rating that came from Goldman Sachs following that last earnings report. Now, they said there was multiple factors that led to this hold rating. On the plus side, Palantir's significant revenue growth, particularly within the U.S. commercial sector, and their decision to focus on an AI platform boot camps are contributing to the hold rating. But there are factors tempering their outlook as well. They said that their net retention rate dipped slightly, which may indicate decreased activity in the international commercial sector. With a more bullish outlook, we do have an analyst from Bank of America who gives the Palantir stock a buy rating. The analyst said that she sees the company's recent success and future growth as strongly tied to their significant differentiation in the field of AI services, and that the fact that their AI platform is still in the early stages but already making substantial contributions is a positive sign. They also believe that Palantir is well positioned to address labor challenges across industries by helping customers leverage their own data for improved employee productivity. But like I said, overall, the Palantir stock has a lot of differing outlooks, currently coming in as a hold based on 4 buys, 5 holds, and 5 sells. The average price target comes in at $15 per share, which would actually be a downside of nearly 30% from current prices. Down below, we can see those recent ratings all coming in this month. On the low end, we do have a sell rating with a downside of 76%, so feeling pretty bearish on the stock there. The only plus we have on the buy end is a rating from back in September with an upside of 17%. Even our recent buy ratings here have a slight downside as the stock has already surpassed those price targets. So that is a quick look at 3 stocks that have recently hit 52-week highs and some of the outlooks that analysts are predicting. But of course, I always love hearing from you guys, so let me know your thoughts on these 3 stocks and whether you think they can climb even higher or if things are about to cool off. Let me know in the comments down below. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant to share what some analysts are looking at, so make sure you always do your own research and due diligence. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.